Welcome to the Deep Dive, your shortcut to being genuinely well-informed. Today, we are locking on to one of the fastest moving narratives in crypto, the base chain meme coin sector. We are diving deep into what is right now a red-hot battle for supremacy.
And the broader context here is just so critical for this deep dive. The market sentiment is really robust.
Right.
I mean, our altcoin season index is sitting at a healthy 63 out of 100.
So clear underlying strength.
Exactly. But what's fascinating is the environment. It feels bullish, but it's also, surprisingly contained. The fear and greed index is definitely in that greed zone.
But retail isn't piling in like we'd expect.
Not at all. We're seeing lower than expected activity, which usually suggests that institutional money, or at least larger investors, are the ones setting the pace here.
Okay, that sets the perfect stage. So our mission today is pretty straightforward. We're going to put them head to head.
The two big ones.
The two reigning base frontrunners, Brett. That's BRETT and Toshi, Toshi. We're going to get into the weeds on the technicals, unearth the hidden utility, and really try to decide which one holds the edge for T4 2025.
And you really can't understand them without understanding their foundation. I mean, both of these tokens are just riding this explosive growth of the Base ecosystem.
And for anyone who's maybe a bit newer to this.
Right. Base is an Ethereum Layer-2, an L2. It's basically designed to give you faster, cheaper transactions than you get on the main Ethereum network. And crucially, it's backed by Coinbase.
That's the key. That institutional pedigree.
It's a stamp of approval that very few other new chains can claim.
Okay, so let's start with Toshi. Toshi right now is showing, just classic breakout behavior. The sources show this powerful upward momentum. It surged 56% over the past month, and then another 24% just last week.
And its market cap is sitting around, $370 million?
Roughly, yeah.
And the chart it backs up all that enthusiasm. Toshi executed this beautiful, sharp reversal after a really long downtrend.
It built that higher low.
A strong higher low, which is, textbook sign that a trend is changing. And for the technical traders out there, what's really important is that it just broke decisively above the 0.5 Fibonacci level.
Okay, so break that down, the 0.5 level.
Think of it like this. It's recovering half of the previous really painful loss. So when you hold above it, that signals a substantial return of buyer confidence. It's a big psychological win.
So if Toshi holds this momentum, what are the next checkpoints we need to be watching for?
The immediate area of resistance, the next wall it has to climb, is sitting right near BOR 0.000099. That's the psychological hurdle.
Okay.
If Toshi can push through that with some real bullish volume, the next major target is up near the 0.236 fib level. This breakout suggests it's in price discovery mode. It's looking for a new floor.
Right, so if Toshi is this smooth, continuous ascent, then Brett is the much more difficult question.
Totally different story.
Yeah, what happens when a meme token loses its steam? Let's look at Brett's setup because it's a completely different picture. It's actively retreating from its previous highs.
Absolutely. Brett's current market cap is, similar to Toshi's, around $381 million. But, and this is the big, that number is a stark drop from its peak.
A huge drop.
I mean, earlier in the year, it hit a staggering $2 billion valuation. The sentiment just bled out.
That sounds like a major, major risk. So how is that volatility actually playing out on the chart?
Well, the volatility is intense. It's down 2% this month, but then it's up 17% this week, and then it's down 8% today.
Just a total whipsaw.
It is. But this kind of severe oscillation creates these pockets, these zones that sophisticated investors call DCA zones.
Dollar cost averaging.
Exactly. So instead of chasing a breakout, you're buying into the weakness. You're systematically lowering your average entry price, basically betting on a major rebound.
So Brett isn't a breakout play at all right now. It's strictly an accumulation setup. Yeah. And it's based entirely on the premise that it has to return to its former glory.
That's the bull case. And the upside, you have to admit, is substantial. I mean, just returning to a local resistance could give you about 98% gains from where it is now.
And if it gets back to those May 2025 highs...
If the market conditions ever support that again, you're talking about potential gains of up to 173%. But, you have to remember, something fueled those highs. We need a catalyst.
That's the core question, because when we pivot back to Toshi, the fundamentals feel much clearer. It might be the cat coin inspired by Brian Armstrong's pet.
Right, the cat in the blue hat.
But Its fans claim it's way more than a joke. They compare it to giants like Dogecoin,
Right.
because it has real, actual utility.
And that really is the key differentiator. Toshi is trying to build infrastructures, trying to anchor the whole Base ecosystem.
With things like Toshi tools.
Right. And the first major feature is Toshi tools. This isn't just some simple dashboard. It actually integrates AI, specifically GPT-3, to offer real user benefits.
Like what?
Wallet analysis, tracking trader performance, even price prediction, to help cut through all the noise we all face.
So this is trying to solve actual practical problems on the chain. It's not just a token to be a token.
Exactly. And then you've got NFT Oshejai. It's a collection of over 3,000 unique NFTs, which adds a social layer and some community value.
Okay.
But arguably the most critical piece of utility for the health of the entire Base chain is ToshiSwap.
A DAX aggregator.
Yeah, it acts as a decentralized exchange aggregator. It leverages ToshiSwap V2 liquidity, and its main job is reducing slippage on trades for all Base chain tokens.
So if ToshiSwap helps reduce slippage for the entire Base ecosystem, that inherently links Toshi's success to the success of Base itself. That's a really powerful position to be in.
It is, and they take a small 0.3% fee on those swaps, which get split. Beyond the tools, though, the narrative of decentralization is really strong with them.
The MEOW DAO?
Yes, the MEOW DAO, a decentralized autonomous organization. It lets token holders actually vote on proposals. And their official roadmap goal for Q4 2025 is to achieve full DAO governance.
That push for full decentralization is a serious commitment. What does the roadmap hint at for 2026? Are they looking beyond just Base?
They're looking at real-world integration. We see plans for a Toshi mobile integration, which is a partnership with the World Mobile team, focusing on decentralized mobile services.
Interesting.
And we've also seen hints of unexpected new Toshi tools aimed at developers, building on their token launcher, which has already helped over 120 tokens deploy on Base.
Okay, the utility narrative is compelling, for sure. But let's get into the on-chain data, because this is where you have to be skeptical. The sources highlight a huge concentration risk. The top 100 wallets hold roughly 63% of the entire TOSH supply. I mean, that's a massive centralization risk, no matter what the DAO goals are.
You're right to raise that. It's a huge red flag. However, the on-chain analysis that goes with it suggests these large holders are acting more like long-term accumulators than, day traders looking for a quick dump.
What's the evidence for that?
Well, the sources specifically tracked 5 brand new wallets created just days apart that deposited between $4.7 and $5 million worth of Toshi, transferred directly from Coinbase.
Directly from Coinbase. That suggests pretty large structured movements. But couldn't that also just be early VCs or investors moving their bags into position to sell?
It's a critical question that always hangs over these high concentration assets. It's a risk, but we also see this one idle wallet holding over $10 million in 2II that hasn't moved a single token since its initial deposit.
So the pattern for now is accumulation.
The pattern today suggests deep-pocketed conviction is outweighing fear, at least for now. And that smart money narrative is a huge driver of Toshi's momentum.
And that momentum was definitely amplified by the exchange listings. Toshi saw, an 800% rally from its September low after those major listings started coming in?
Yes. Those CEX listings, Binance Futures, Upbit, OKX Spot were monumental for global liquidity. But the latest catalyst is regional. It's the Coinone listing in November.
Coinone is South Korea's second largest exchange, right?
It is. And they launched direct Toshi to Korean won trading, the Toshi KRW pair.
Why is that direct KRW pairing so important? Isn't it just another listing?
It's much more than that. It completely eliminates the need for Korean traders to convert their currency into USD or USDT before buying Toshi.
So it reduces friction.
Dramatically. It boosts liquidity and accessibility for that regional market. And Korean retail traders are, they're powerful. They can account for up to 20% of global crypto volume.
But there's a downside.
A severe one. You are now exposing Toshi to South Korea's incredibly volatile retail market, which is known for aggressive, rapid inflows, but also for brutal panic-selling outflows.
Speaking of alternatives, just quickly, we mentioned Maxi Doge, MXI. Should traders looking for something totally different be looking at this?
If you are looking for that absolute high-risk, high-reward play outside of these two established frontrunners, then Maxi Doge offers that. It raised $2.8 million in its pre-sale. It's running with this Gym Bro theme.
Right.
And it's trying to get users by focusing on utility through a futures trading partnership and promising really aggressive staking rewards, up to 121%. It's a pure speculation play on a fresh narrative.
Okay, let's get into the deep mechanics.
Yeah.
This is really the central conflict of the whole Toshi narrative. If the team is aiming for full DAO governance by the end of the year, what does their smart contract actually reveal about their current control?
We dove into the verified contract on Basescan, and it reveals this fascinating tension. The founding team retains really powerful owner-controlled functions.
So it's not very decentralized right now.
Right. It emphasizes that while the dream is decentralization, the current reality involves significant centralized components for management.
What are the specific controls the owner still has?
Okay, so they can set the maximum transaction size and the maximum wallet size. Now, the contract says these limits have to be at least 0.5% of the total supply, but the fact that the owner can change them, that's powerful.
Very powerful.
And what's more, the owner can set and, more importantly, change the wallets that receive the transaction fees, the marketing, development, and liquidity wallets.
And what are the current fee settings? Where is that money going?
Currently, both buy and sell fees are set at 3% total, 300 basis points. But what really stands out is the allocation. This entire 3% is currently going completely to the marketing wallet.
100% to marketing.
100%, with precisely 0 allocated to the development or the liquidity wallets, right?
0 for development. That seems very strategic. If Toshi is all about building out Toshi tools and ToshiSwap, but 100% of the fees are going to marketing, that suggests they're prioritizing massive growth now over internal funding.
That's the read. It's a hyper-aggressive growth strategy, funding external awareness entirely through transaction fees. We should note, though, the contract does have one boundary. The total fees must remain 3% or less.
So on one hand, Toshi looks like this sophisticated, utility-driven project with a clear path to decentralization. But on the other hand, the contract gives the founding team unilateral control over key financial inputs and supply limits.
Yeah.
That feels like a huge potential point of failure.
It is, and this centralized control is set against that unavoidable volatility risk. We have to say it again, these are meme coins. They're subject to extreme swings.
Like the recent drops.
Yeah, Toshi had a 42% monthly decline and an almost 12% drop in just 24 hours in mid-November. These assets are just so sensitive to market rumor and macro factors.
And yet, despite that, the advocates keep pushing this catcoin supremacy narrative. They argue its current market cap, around $180 million in one recent calculation, is massively undervalued compared to the $50 billion dog and frog meme market.
That narrative is what sustains the community for sure, but you have to respect the math. To get that 200x return that some advocates talk about, Toshi would need something like $36 billion in market inflow.
I mean, that's just a massive stretch.
Yeah. It is a gargantuan leap, especially when the entire meme sector is only valued at $50 billion today. It's a long-shot target that really relies on Base L2 itself, fundamentally changing the whole crypto valuation paradigm.
So what are the core takeaways you should leave with today?
I think the contrast couldn't be sharper. You've got Brett, which offers this massive, almost pure rebound potential. It's a bet on recovering lost confidence from a deep accumulation zone.
And Toshi.
And Toshi is the complex bet. It's balancing this high volatility and smart money accumulation with real substantial utility and a genuine roadmap towards decentralized governance.
And you have to remember that Toshi's fundamental trajectory is absolutely inextricably linked to the long-term success of the Base L2 ecosystem. If Base wins, Toshi's utility becomes instantly validated.
Exactly. The success of the infrastructure validates the long-term narrative, and it takes it beyond just being a meme. That is Toshi's ultimate competitive edge.
So let's end with a final provocative thought for you to consider. Given the deep control embedded within Toshi's smart contract, the owner's ability to change transaction limits and fee wallets at will, is that final phase of MEOW DAO governance really a sign the team is ready to give up control? Or will the ongoing need to manage all this complex utility always require a powerful owner behind the scenes, creating a permanent centralization risk within a project that claims to be decentralized? That's the tension we're left with. Something to mull over as you continue your own learning journey.